Chapter 1. Understanding Financial Markets. Part 2. Explanation of market participants and their roles. As you delve deeper into the intricate world of financial markets, it's crucial to comprehend the diverse range of market participants and the pivotal roles they play in these markets. Whether you are trading Forex, stocks, or cryptocurrencies, understanding these participants will give you a more profound insight into how markets operate. Forex market participants and roles. Central banks. Role. Central banks, such as the Federal Reserve, Fed, in the United States or the European Central Bank, ECB, are key participants in the Forex market. They are responsible for managing their country's money supply and implementing monetary policies. Their actions can significantly influence their domestic currency's value. Example: when the ECB announces a reduction in interest rates, the euro, EUR, may weaken against other currencies as investors seek higher yields elsewhere. Commercial banks. Role. Commercial banks are essential market participants in Forex. They facilitate international trade for their clients, manage foreign exchange risk, and engage in speculative trading. They often act as market makers, providing liquidity to the market. Example: a U.S. corporation engaged in European exports may work with its bank to hedge against unfavorable currency fluctuations when converting EUR revenues into USD. Hedge funds and investment firms. Role. Hedge funds and investment firms are active in Forex markets for speculative trading. They often employ advanced trading strategies and can significantly impact market movements, especially in the short term. Example: a hedge fund specializing in currency markets may use algorithmic trading to capitalize on short-term price disparities between currency pairs. Corporations. Role. Multinational corporations participate in Forex markets to hedge currency risk associated with their international business operations. They use Forex markets to ensure stability in cash flows. Example: a Japanese automaker selling vehicles in the United States may hedge against unfavorable JPY-USD exchange rate movements to protect profits. Retail traders. Role. Individual retail traders are the lifeblood of the Forex market. They include both beginners and experienced traders who participate for profit or hedging purposes, using various trading strategies. Example: a retail trader might engage in Forex day trading seeking to profit from intraday price movements in a EUR-USD currency pair. Stock market participants and roles. Public companies, issuers. Role. Public companies issue shares of stock to raise capital for various purposes, such as expansion, research and development, or debt reduction. Shareholders, including institutional investors and the general public, invest in these companies. Example: when a tech startup goes public through an initial public offering (IPO), it raises funds by selling shares to investors, which can then be traded on stock exchanges. Stock exchanges. Role. Stock exchanges like the New York Stock Exchange, NYSE, and NASDAQ provide the platform for trading shares. They ensure fair and transparent trading, maintain listing standards, and match buyers and sellers. Example: the NYSE is known for its iconic trading floor, where traders in colorful jackets engage in open outcry auctions to match buyers and sellers of stocks. Institutional investors. Role. Institutional investors include mutual funds, pension funds, and insurance companies. They manage large portfolios on behalf of their clients and invest in stocks for long-term growth and income. Example: a pension fund may invest in a diversified portfolio of stocks to ensure steady returns for retirees. Retail investors. Role. Retail investors are individual investors who buy and sell stocks through brokerage accounts. They can be short-term traders, swing traders, or long-term investors, and they play a vital role in the overall stock market ecosystem. Example: a retail investor might buy shares of a tech company like Apple with the intention of holding them for several years, expecting the stock's value to appreciate over time. Market makers. Role. Market makers are firms or individuals that provide liquidity to the stock market by quoting bid and ask prices. They ensure there are buyers and sellers for most stocks, even in volatile markets. Example: market makers may provide continuous buy and sell quotes for a particular stock, facilitating efficient trading. They profit from the bid-ask spread. Cryptocurrency market participants and roles. Miners. Role: miners validate and record transactions on blockchain networks. In return, they are rewarded with newly created cryptocurrency coins and transaction fees. Miners secure the network and maintain its decentralization. Exchanges. Role: cryptocurrency exchanges are platforms where users can buy, sell, and trade various cryptocurrencies. They act as intermediaries, facilitating transactions and providing liquidity to the market. Example: exchanges like Binance and Coinbase enable users to trade Bitcoin, Ethereum, and other cryptocurrencies against fiat currencies or other digital assets. Wallet providers. Role: wallet providers offer digital wallets for users to store and manage their cryptocurrencies. These wallets can be hardware-based, software-based, or mobile applications, ensuring the security and accessibility of digital assets. Developers. Role: developers create and maintain the software that powers blockchain networks and cryptocurrencies. They are essential for the ongoing development and security of blockchain technology. Example: Ethereum developers work on smart contract applications, dApps, and network upgrades to enhance the capabilities of the Ethereum blockchain. Speculators and traders. Role: traders and speculators aim to profit from cryptocurrency price movements. They engage in buying and selling cryptocurrencies, often using technical and fundamental analysis to make informed decisions. Understanding the various market participants and their roles is fundamental to navigating these financial markets effectively. Whether you're a central bank influencing national currency values or a retail trader speculating on price movements, each participant contributes to the market's dynamics, creating a vibrant and ever-changing trading environment. In the subsequent chapters, we will delve even deeper into the mechanics of these markets, providing you with the tools and knowledge to make informed trading decisions.